All right, how are we all doing? So it's been a while from me, and here is me wishing you all a happy new year. All right. So first and foremost, I'd like to announce that um our 2024 mentorship is open, training for the new set of students is open, and it's for those in Nigeria, it's valued at 50,000 naira, and those outside of Nigeria, it's valued at $49. All right, $49. And then a one-on-one mentorship. For a one-on-one mentorship, you have direct access to me. A one-on-one mentorship is $180. That's 200,000 naira. All right, so let's get into what I want to share with you guys. So I want to share how you can do your top-down analysis. A lot of people, I just want to try and answer a lot of people's questions on how do I do my top-down analysis. All right. How do I do my top-down analysis? Okay. So if you want to reach me on Telegram, here is my Telegram handle, Damilola the Profitable Trader. All right. Yeah, that's my Telegram handle. Okay. So you can reach me. All right. So first and foremost, let me start by saying that all you need to make money is a defined trading range. That's all you need. That's all you need. All right. All you need to make money is a defined trading range. Okay. So what you want to always do is starting your analysis from the higher time frame down to the lower time frame. For me, it's really not difficult. All right. So what you want to always do is if you are starting from the monthly, like I do sometimes, all right. Uh, just a minute. Okay, if you are starting from the monthly, just like I do sometimes, your question is you want to understand where is the directional bias of the market. All right, where is the place that price is potentially going to go to? All right, what direction is it going to potentially go to? That's the first question you want to ask yourself. All right, permit me to remove all of this. So your higher time frame tells you where price is potentially going to go to. All right. So it tells you where the direction of the market is. Is it to the upside? Is it to the downside? All right. Now, for me on gold, I'm actually super bullish on gold. Of course, as you can see on the chart, right? Gold is actually bullish. So we want to see price more bullish price action. So from the monthly time frame is already telling us that okay, we should be looking for buying opportunities because we are in a bullish trend, all right, on the monthly time frame. But of course, we may not be able to take trades from the monthly time frame, right? So the next thing we do is we want to check, all right, now that we have known what we want to be looking at on the monthly time frame, right? We are looking for buying opportunities. Then we come down to the weekly time frame to look for where we can actually get a buying opportunity from. All right. Now I have not taken a trade. I have not. All I'm doing is I want to know first where the market is headed to. Then number two, where can I get an entry for a buy position? Now let me just quickly bring a few things to perspective, right? So price rejected from here, all right, making this low, this particular low, a very strong, significant low for us. All right. Rejected from here. You can see that rejection. And then the next thing that happened was price went for this external liquidity. All right. So this tells me that this is how I do my top-down analysis. So this tells me that this guy right here, this region right here, okay, this region right here is a very, very significant one. All right. And then on the weekly also, I am seeing this internal liquidity, right? And then also seeing this imbalance right here. Okay. I'm seeing that imbalance sitting right there. So we've taken out this eye, we've taken out this eye. So on the weekly, this is our defined trading range. This is where we want to be looking for all of our activities. All right. Let me clear up some so that we can have a neat chart. Okay. All right. Okay, good. So we have all of that. So it means that this for us is our defined trading range where we want to be looking for buying opportunities. But of course, I can't take a buy on the weekly time frame. All right. But number one, my weekly time frame and my monthly time frame has shown me what direction the market is most likely going to go to, and that's to the upside. Okay, so what I now then want to do with my lower time frames is to understand where I am in all of that weekly range. All right, so that I can position myself for a bias. Now, this is weekly time frame. It means that if price is going to come here, price should, all right, not price will, it's a probability because price can decide to continue blasting through, all right, but price should at least give a retracement into this area, okay, and then we can continue to push up. So I normally get a question of, okay, coach, this guy is bullish on the higher time frame, but on the lower time frame is bearish. What do I do? One thing you must understand is number one, your higher time frame structure is what you always want to pay attention to. And so the lower time frame structure is just going to give you maybe a short direction, not the actual continuation. So the lower time frame can just be a retracement of the higher time frame structure. All right. So now having done all of that, then the next thing I want to do is come to daily time frame to still see what is price currently doing, right? So that I can take my trades based on an intraday perspective. Okay. Now the daily time frame still looks, bullish to me. All right. Still looks bullish to me. So I'm just going to walk you through um a particular trade setup that happened today on gold. All right. So now this guy is bullish. All right. If we switch to the line charts, right? If we switch to the line chart, this closed above here. So we still have this as our higher high, higher low, higher high. All right. But then going back to the candles, something very, very important happened. Now, first, price naturally is supposed to go up and keep, blasting through until we take this particular external liquidity. But instead of that, we saw price rejecting, all right, and price is currently inside of this imbalance. Okay, don't forget that these are all our internal liquidity on the weekly time frame. All right. So now it looks like price is selling. So at least price should at least come into this imbalance, right? Before continuing its movement up. Okay, if it doesn't continue its movement up, it means that this low will be violated. And if this low is violated, they most likely may be coming for that weekly imbalance that we have. This is how you build up your thought process. Okay, so I'm telling myself, if they don't reject from this imbalance, then they most likely will take out this low, come for this low, and come into that weekly imbalance, right? Remember that we are still looking to buy, but now daily is kind of telling us that okay, we might have a short sale. So knowing fully well that my higher time frame is bullish, if I'm going to be taking any sale, I would have it at the back of my mind that this sell is going to be a short sell, or this sell is going to be a low probability trade. All right. So now, seeing all of these sell retracements, can I capitalize and get a sell trade? Of course. So the next thing I do is I come down to my 4 hours, right? And on the 4 hours, I began to see something very significant that happened. Okay. So I'm going to show you this, and then I'll bring up the markup. All right. So now this is 4 hours. Now we rejected from this particular order block, right? Price rejected from this particular order block. And this order block is very, very important, right? So once this rejection happened, right, I saw this as this is our internal liquidity. All right. So we have our inducement liquidity or internal liquidity, then price rejected from this order block and sold down. This particular eye, this one right here, becomes a significant strong high. All right, a significant strong high. And then what we see next is that price created a significant strong high, created a low for us, all right, gave us an inducement liquidity. So this low is very, very important. This low becomes our external liquidity that price would come to take, right? So price took internal liquidity right here, came into this strong protected high, and then sold down massively. All right. Remember that this is the daily imbalance that we are looking for price to at least first come into. All right. Then maybe if you get a reaccumulation, then we can go up and all that good stuff. All right. So now 4 hours is bearish, monthly is bullish, daily weekly is bullish, daily is also bullish, but 4 hours is bearish. So what do I do? What I'm going to do is I will keep in mind that these three higher time frames, daily, weekly, and monthly, are bullish, but 4 hours is bearish. So the 4 hours might be a retracement for the higher time frame that we are seeing. So this is when you would even know the kinds of trade you are going to say you want to hold for too long. Maybe you are a swing trader, all right. But of course, we know that 1 to 3 TP, it's all good. Okay, so my 4 hours is bearish. What do I do? I can still take a sell and find the nearest target. All right, the nearest target. And what is the target? The nearest liquidity that price is most likely going to attack before it goes up to buy. All right, so this becomes the protected eye. Don't forget. Then we go down to the 1 hour. Remember, we are still bullish, but we saw a sell opportunity that we capitalized on. All right. So now 1 hour also, of course, is still bearish. Now, why is this a strong eye? The reason why this is a strong eye is because it took out liquidity, right? It took out this liquidity and rebalanced an old imbalance. All right. That's why it's a strong eye for us, what we call a protected eye. Okay. So it took out liquidity and also rebalanced an old imbalance. Now you can see how price came back into this particular order block that was responsible for the sweep of liquidity and also the rebalancing of that old imbalance, right? So price came back there and sold off beautifully from there. Do you understand? Sold off beautifully from there. Now, remember I said you are looking for the nearest target. Now, what is the nearest target after this price started selling from here? This is the nearest target. All right. This is the external liquidity. Okay. That price should come to. Now, all of this sale happened. You probably didn't get an entry. It's no problem. But then price is now close to this liquidity. It doesn't make sense for price to be close to this liquidity around here, then now go back and say he wants to start selling from here again. Whatever makes price come back all the way up here, this eye will be taken out. All right, this eye will become the inducement liquidity. All right. So let's now investigate all of this that happened on the 30 minutes and see the setup. So remember, this is the nearest liquidity we are going for. So this is the setup. Now, I said what makes a strong high or a strong low is sweeping liquidity, rebalancing and holding balance. And this happened here. This liquidity was swept and this holding balance was rebalanced. All right. And I think I don't trade breaker blocks, all right, and all that stuff. But I think this is a breaker block and price actually sold off from that guy beautifully well. So you have a lot of confluence as to this particular eye. All right. So that eye was swept, imbalance was rebalanced, and then price sold off, breaking this particular structural point. Then this became the inducement liquidity for us. Okay. So maybe this is a 30 minutes. I could just have played the imbalance. All right. This particular one. But let's see what price actually played there. The setup was actually on the 15 minutes. So on the 15 minutes, this is it, right? This particular order block, I'm interested in this particular order block, this particular one right here. And that was what price rejected off from. So you can see it. This was the inducement liquidity, this first low and this 1 hour, 4 hours liquidity that we're anticipating that price should come for. Now you can see that price took out this particular liquidity, came into this order block and then sold down. So let me pull up the setup for you so you can see. Um, yeah. All right. So, yeah, copy. All right. So I'm pulling up the setup now. So let's just wait for it to load up. Yeah. So here we have it. So this was the setup earlier today, right? Now, this particular low was not taken, it was intact. Then I saw price rejecting off of this particular order block. So let's go back to our chart. All right. So this was the area where price began to reject off from. Let me point that out. Okay. All right. All right. This particular. Okay. Instead of this other block. So I was anticipating that if don't take it, then this liquidity, and that was what they sold down, and that news, and then was asleep. You want to walk your time frame. Time frame tells you your buyers, where you are going to, where is price going to. All right. And then you are now able to find your trading range. You can see that we were able to sell, although price is bullish on the higher time frame. Lower time frame is bearish, but we saw a lower time frame target that price might want to go for, right? And then price went for it, activated us, went for it, and then that was a very sweet sell trade. Okay, so what we would then be anticipating is that going back to the 4 hours, right? Going back to the 4 hours, we want to see price come into this particular imbalance. All right, give us an evidence. If there is no evidence, right, it means that most likely this low is going to be taken. And if this low is going to be taken, then we remember that we have a weekly imbalance and weekly internal liquidity that price might be headed for. I mean, this is just as simple as it gets. This is how you walk yourself from higher time frame down to the lower time frame, doing your top-down analysis. All right. So I just did this generally to help us understand, based on lots of questions I get on how to do top-down analysis. All right. And this is more like an insight of how I personally do my top-down analysis. All right. So I hope you got some value on this video. All right, so you can share, you can comment below in the session. All right, and then if you want to reach us for our mentorship, the link will be dropped below this video. All right, so thank you, cheers, and God bless.